public equity markets. And MicroStrategy, we just inadvertently backed into that. Because to do what we did, you have to start with a very small company, $1 billion company, and then we become a $40 billion company, and now we're 150% Bitcoin. So if you take another $1 billion company and do what we're doing, you can't catch us. Because at this point, we can grow $5, $10 billion a year in capital or faster. You can't catch us if you start with the same thing. But if you take a big company like Google or Meta or Microsoft or Apple, and they took $50 billion, and they bought $50 billion of Bitcoin, well, that would be good for Bitcoin, and that would be good for their shareholders. And if Apple did it a lot, they might add $1 trillion to their market cap. But it would be $1 trillion on top of $3 trillion. So at the end of the day, Apple would be an enterprise, 25% Bitcoin, 75% Apple. MicroStrategy is an enterprise, 150% Bitcoin. So how do you create a company which is 150% Bitcoin that can sell billions of dollars of fixed income instruments or billions of equity into the market with a permanent capital base that's going to oscillate, it's going to vibrate with the frequency of Bitcoin, right? That is, I'd love to say we had the idea 4 years ago and that's what we were trying to do. No, we just kind of stumbled onto just a really great business.
I do want to get to Apple and how you perhaps plan to convince companies like that to follow your Bitcoin adoption strategy playbook. But this whole conversion, financial engineering type strategy is often referred to online as the infinite money glitch. But I wonder if it is infinite or not. And if it's not, do you perhaps see it running into more of a supply issue first or a demand issue first? Demand being perhaps there might not be potential buyers of all of those other options like bonds, or supply that if you create too many shares and can make too many conversions from your stock, that existing investors will be diluted too much that you'd then run into a sort of cap with that. Or can this just keep going forever, Michael?
See, the misnomer there is it's not a money glitch. It is a digital transformation of the capital markets. When you have a system that moves from a higher energy state, a more disordered state, to a lower energy state, lots of energy gets given off. Think of steam becoming water. Like, is it a money glitch? It's just steam becoming water and it condenses. What happens when water becomes ice? It's not a heat glitch, but heat. What happens when you add heat? The ice becomes water, the water becomes steam. So if you look at the capital markets, you've got $800, $900 trillion of wealth in the capital market, and you've got this wealth, you've got people invested in all these heterogeneous assets. Why do 98% of the companies in the S&P 500 not perform, right? How come 1% of all the returns come from like 7 companies, right? What I talked about with, if you study the convertible bond market, someone issues a convertible bond, it takes them 5 years for the investors to figure out whether it worked. And then when they come up with a new convertible bond, it's a different credit proposition. It's very inefficient, right? If you think about preferred stocks, very inefficient. Junk bonds, very inefficient. Private credit, very inefficient, Fixed income, people get very low yields. What if I'm getting this yield and I'm taking all this credit risk and counterparty risk? So of the 900 trillion in capital in the global capital markets, half of it is just long-term store of value, long-term capital. That is pure capital. People with money just want to keep their money. Rich just want to stay rich. I give you an organization $1 billion in the endowment. You just want to not lose the $1 billion.
Precisely.
Right? So that 450 trillion is invested in buildings that are rusting. It's invested in cars. It's invested in fleets. It's invested in things that suffer from 20th century risk factors. Credit default, war, tariff, tornado.
Tax.
Like you had a good business at Kodak and your family had all their money in Kodak, and then what happened? Or you own Xerox, and what happened? Then you own the best business in Ukraine, and then there's a war. That happened. Right? I could give you 10,000 examples of risk factors that destroy wealth. So you've got that, 450 trillion on one side, and then you've got 1 trillion digital capital. It's like, well, I had a building, I get rid of all the things that make the building a problem, and I make it an invisible, immortal, indestructible, teleportable digital building.
That'd be cool.
Okay? Well, that's what Bitcoin is.